Hello, good morning, friends and fellow traders and investors. Welcome to Nifty and Commodity Market Analysis with SD. मैं हूं SD Shanando Das, multi-asset trading and investment specialist. These videos are not a trade recommendation because I believe in risk management rule number one, that we don't listen to others and jump on a trade. This is more of my video log and a guidance to my learners and those who regularly follow in my social media channel. Thank you so much for your regular following. So first we'll take a look at the overall Indian equity market condition. And where do you start? We know that we start from the understanding of the risk. Overall risk in the market, I take a look at, and this helps me to understand how big a decline, because when risk goes up, equity market tends to underperform. So understanding the overall risk helps me to understand how the risky assets, even the cryptocurrency, which is a risky assets, going to perform. So first I take a look at the weekly chart. This is my regular work where I can see global equity master is suggesting safety, no significant concern in the long-term chart. Smart money has been long-time risk aversion. That means they are not betting for high risk, high beta equities. Some short-term confusion can be seen in the Indian equity market, but positive commentary towards trade agreement has significantly boosted Nifty in the short term. After I take a look at the weekly chart to understand risk, I go in the daily chart level, which is more short term. And in the short term, I can see there are some concern. Risk is confusing at the moment. It is not fully green or significantly safe. So it will be better at current market situation to be cautious, not go for too much of aggressive bet into equity. Largely one of the reason is we are in the late part of the business cycle. That does not mean that market is going to crash tomorrow, but it is a time to increase the defense in our portfolio. I'm not suggesting you to do the same. I'm just saying that I have significantly increased the defense in my portfolio by going to asset class like bonds, which provide more assured return, while equities are growth asset, one of the best to go in the early part of the business cycle that started after COVID-19 pandemic around 2020 June July. Now I'll go to the extremely short term chart, 125 minutes chart. Overall, there is a reason building up to be concerned in the global equity. So some of the equity market globally can underperform. I can see the Nasdaq is signaling Nasdaq, some part of S&P is signaling risk aversion or a possibility of down move. One good news for India though, that the forward risk measure in the lower table is downside risk in decline. So that means extremely upcoming days, no significant rise in the risk level. But mid-term and long-term equity risk remains high. That definitely, because if we don't get a trade agreement with rupee declining, the foreign investors' mood can significantly sour and our equity market can underperform. So after concluding this analysis on the overall risk in the market, I'll take a look at the situation with the Nasdaq, and this meter is showing what is the condition of overall equity market in the weekly chart. Several of the markets still in the rising mode: S&P, Dow, Nasdaq, Eurostox, Italy, Europe, and US still firing. Whereas China, Nikkei, India, the Asian market has somewhat started to downperform. Let's look at this chart via the daily. Daily will give us a more short-term picture. No significant concern. Nasdaq even so far doing okay. No major concern, but there is a possibility that Nasdaq may not perform anymore. There is a tough battle going on in the AI space, and it has been boosted by significant increase in investment in AI infrastructure by these companies. But concerns building up, can these companies really justify the kind of capex or capital expenditure they are going? Like in a recent interview, OpenAI founder, one of the founder, Sam Altman, avoided a question ki how a company which is earning in billions can justify $1 trillion of capex investment. So those high level of debt driven investment in the AI remains a concern. Now we'll go to take a look at more in our market situation, Nifty. In the Nifty, this is lower portion is my strength meter, which last time you must have seen. We can with this monitor where the strength in the market is. Currently, I can see the strong is Nifty, Bank Nifty 100, 200 mid cap. And Bank Nifty is significantly, means banks are strong currently among the stocks. Whereas the weakest portion of the market is the small cap, market cap wise. So Nifty 50, 100, 200 became more neutral, no major rising in the strength in the weekly chart. But banks are still rising in the strength. If we come down to the sectoral analysis, it is the auto sector which is strong and still rising in strength in the weekly. If we take a closer look at my candle which shows price action via color, I can see strong bull and bear fight. No indication of a major market downturn, but some momentum loss. And this I have warned for several months now that we could be moving to a situation where passive investors who have been doing SIP since October 2024 are earning either nothing or lower than the fixed deposit and lower than the inflation rate. This can be seen easily if you look at last 1 year performance of the mutual funds. Majority of the mutual funds have downperformed even a fixed deposit return. Let's look at Nifty more in the daily chart now. Let's look at the daily, and this I'll make. So I'll duplicate this one and make it more in the 125 minutes while I take a look at through the daily chart. Daily chart of Nifty, I can see it's not a significant bullish. There is a sell signal, but sell signal is weak with only 11% win probability. If I make the probability meter of mine slightly bigger, you will be able to enjoy the probability readings. In the probability readings, it is clear that buyers still hold the advantage. But with the sell signal, that means more mixed market is expected. Consolidation chance is around 50%. And in the daily chart, if I take a closer look at the sector level, energy has started some rising. So we want to look which are the stocks that rising into strength. Healthcare, infrastructure, pharma, they're also in a rising mode. IT, after a good strength build up, some falling can be seen in the IT sector in the daily chart, whereas metal and private bank in the daily chart is rising into strength. Let's make the chart again a weekly. In the weekly chart, if we look at other sectors, I can see it is the pharma, IT, metal, and private bank. So overall, the strength I can see where the pharma, IT, metal, and the banking system, while other segment remains significantly weak. Sorry, this chart has become somewhat NG. Sorry for that. Buy trade win probability remains quite significantly high. I wanted to show you in the very short term chart where the strength is. Short term chart, we can see majority of the sectors are today in the rising mode in the 125 minutes chart. But more strength it is clear in the metal, private bank, public sector bank, and in the pharma segment. So those segments are strong. There we can look for individual stocks who are the next level of the leaders. After this analysis, let's go to the option market analysis. Currently, especially since yesterday, I saw a change in the market around this time, 120 close. My candle turned more neutral, price action neutral, that means bull bear fight started. And currently, bulls have taken over some of the control. Saying that, if I look at into greater details, let me make it larger. Probability wise, bull win probability is just around 36%. So not significantly strong. And looking at the probability reading, it looks like more of a range bound market. That means the latest commentary on trade agreement and a discussion between our Prime Minister and President Trump has given the latest boost. Option wise, our strategy has changed, especially since yesterday. It signals squaring off of the bear call spreads and moving on to the more bull put spread in the defensive strategy and some of the bull call spread. But given the rangish nature of the probability, it is better to play the defensive strategies rather than aggressive bull call strategies. So with this, I will go into deeper and look at what exactly coming the reading from the option premium market. So strategy on, in the settings, we need to choose the correct expiry, which is close by 16th and 23rd, and the correct at the money is 26,000. This reading is subject to a change. It is live with the market. Currently, we can see which trades have higher chance of success. Going into 16th expiry is bull call ladder. As I said, market is more rangish. Ladder is the rangish strategy. And bull put spread, which is an income strategy on the bull side. And interestingly, we have bear call spread is high as well. That means market is not very bullish. Playing aggressive strategies may not work out. As readings keeps on changing, it is better to wait for the closing to confirm closing of the candle time. That will be next will be around 125 to make sure of the readings. Let's change the readings to 23rd, that is the next to next expiry of the option. And we'll let it adjust the meter. The higher chance I can see of the bullish success. Bull call spreads, ladder, bull put spreads, and only on the bearish side, bear put ladder, that is a range strategy. That means for 23rd, market looks like relatively more bullish rather than the 16th of expiry in December as of the current reading. This is the Nifty 500 chart, which we must see if we are investing into individual stocks. Nifty 50 is not the right representative for stocks. Nifty 500 is always better. And in this, what we can see, price action is neutral, strong bull bear fight. In the very weekly chart, long-term chart, we can see momentum loss, as can be seen by RSI X, some momentum loss. So it is clear not every segment, as we have correctly seen from the strength meter, is performing. That means more individual choice of stocks, more individual sectors are going to outperform. So this is not an outright bull market, means where you make a bet and it almost goes up. Here the risk is elevated. The weak stocks will continue to downperform, where the strong stocks will perform well, but you can have zigzags more. Previously, before 2024 October, this was an outright bull market. But this is looks like more rangish bull market. In rangish bull market, group of stocks, sector to sector outperform. Not any bet will go well. And so far, the strongest was mid cap segment. But mid cap from this chart weekly is clearly losing some of the steam. After a strong breakout, mid cap has now gone into a correction. It will be better to wait for the momentum to return in the overall segment. Not just mid cap, Nifty 500, mid cap, a broad range of index should show momentum comeback. That is missing right now. And now we'll take a look at the Nifty small cap. This has been, I've said repeatedly, is the weakest segment. And it is not surprising anyone has seen my Sunday stocks turn. Small caps are one of the best, but not in the late part of the business cycle or when market is going down. In the early part of the business cycle, if you mix the right combination, low PE, small cap stocks, and a buy signal or momentum, or say chart pattern wise inverted head and shoulder, double bottom, they tend to do very, very well. But small cap is a segment that does not do well in the late part of the business cycle. That is exactly what we are witnessing right now. Small cap is still not strong enough, and anybody has gone into small cap mutual fund since October is broadly in negative return. That means currently it is better to choose from the sectors where the strength is still persisting: pharma, IT, metal, and the banks. That's where the strength is. Other segment seems to be weak. With this, I will conclude the equity part of the analysis. Now I'll go to the commodity. In commodity, one of the best, given the leverage, the movement, the global manipulation cannot be done. Considering all those factors, gold, silver, crude oil, and natural gas, these four are one of the top commodities to trade. In the gold, it is clear after a range bound action, gold is trying to make a comeback. Just a moment. In the strength meter, if I apply the strength meter, I'll be able to see the gold, silver, and also the base metals. They are in strong and firing well in the daily chart. 2 hour chart, I have been bullish, playing bullish strategies. After a correction in here, in the momentum, looks like gold after a COMEX gold correction again coming back into strength. That means after profit booking in this zone, we could be getting another re-entry opportunity. The candle will close around 12:30 p.m. India time. Let's look at silver. Very, very strong in the daily chart. Anybody continuing with silver bees? Matlab silver as an ETF swing investment? I'm continuing and I'll definitely continue here. Trading is different for me. I'm not saying to follow me. Trading for me is more short term. Silver Comics has given an exit, partial exit with the momentum loss. Now I need to wait for the momentum to once again come back. This candle will close around 12:30 India time PM. Let's look at crude oil. Crude oil currently I'm not favoring that much because it has been rangy. The latest sell signal or the buy signal, either way, I'm not getting very good trend. This is a 2 hour chart, a comeback. But if you look at the daily chart of crude oil, it has been very, very rangish. So when crude oil or any commodity is rangish, we can play more rangish based strategy in option. But in future, we need to play directional strategy. Or one can go for intraday position. So positional trading wise, it looks like not a great time for crude oil. Rather, where I got good move is the natural gas. Natural gas has been giving quite a solid trend, which it gives usually. And now natural gas is giving out partial profit booking signal with price action being neutral and short-term momentum being bullish. When I personally get this kind of signal, I tend to book 50% of my position on the short side and wait for the next opportunity to move on the directional trade. So that's all, friends, from my side of analysis. I hope it was helpful to you, but none of it is meant to suggest any trade that you jump onto it. That is not the right approach to trading. You can get guidance from my analysis. You can use the setup, but you have to have the plan properly because otherwise the right mindset will not build up. So thank you everyone for attending. Now I will be taking Q&A from you all. If you have any questions, I will be very, very happy to answer them. I'll open up the chat. Chat was closed. And this Q&A session will not be published in the YouTube, but rest of the discussion you can get, again watch if you want to, you can get in my YouTube channel. Thank you everyone.